Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back, KS family. Let's run the numbers. Bitcoin currently down 1.34% to 41,905. Ethereum down 1.62% to 3127. From my 30 plus years in financial markets, I explain the smart money, institutional mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I wanted to thank the members of our community who have reached out. Scammers are trying to approach people. We have 2 official emails. If you get any email from these addresses, you're fine. I can't list all the scammer addresses. They keep on just creating them. So official emails, kstanf@gmail.com and kenstanfield2018@gmail.com. These are my official emails. You can contact me there at any time. If you receive any email from anyone else, you will find that person is a scammer. These are the only 2 emails I actually contact people from. If you find that you've been talking to a scammer, please send the information to me about the discussions. I really want to track these people down. Keep safe out there, my friends, and basically just understand kstanf@gmail.com or kenstanfield2018@gmail.com are the only 2 official emails. Just like cryptos go through pullbacks, we also go through life pullbacks. If you're going through one at the moment, I just want to let you know that the community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. Let's have a look through the news headlines of Bitcoin. What we're actually doing here is approaching Bitcoin news as a retail investor. Retail investors typically do the light switch effect. When things are not going well, they go all out. When things are going well, they go all in. This is really very, well, it's opposite to the smart money institutional mindset. Smart money buys when things are going down. It sees great opportunity in negative prices, but more on that later. So the concept is, what do we see here? Bitcoin correlated with long-term tech stocks since 2020. Wow, we know the markets have been going up for decades, and we know Bitcoin has been doing really well. In fact, Bitcoin has outperformed all major indexes and markets. Bitcoin price hovers around 42,000. Cardano pulls back nearly 5%. Okay, interesting. Invesco says Bitcoin could fall below $30,000 this year. Is they sending some message out? 30,000 is what the institutions want to put it down to? Maybe, but what do we see here? If you come from a retail mindset, you're probably getting really scared looking at this particular figure. For example, you would say Bitcoin is around 42,000, but if it's 42,000 and these experts are predicting below 30,000, shouldn't you sell now? And who are you actually selling to? Who's going to buy all that Bitcoin that's in retail hands? Answer, the institutions. Wow, they really like to place their buy orders, don't they? Through the news. Bitcoin dominance increases, Ethereum's market share slides, stablecoin and smart contracts. Okay, very interesting. There's a whole lot of conversation on Bitcoin dominance. Of course, as more and more people understand what actually crypto represents, it's Web 3.0, the ownership layer of the decentralized internet. And when people understand that they're owning part of the new internet, of course Bitcoin dominance will still continue to decrease. It's just what it will do. Ethereum could be under threat by newer rivals as well. Intel wants to be a Bitcoin player. It won't move the needle for the stock. What are they actually saying here? They're saying when organizations get involved with Bitcoin, it's actually really positive for stock price. A lot of institutions are getting into Bitcoin and crypto, and they understand Bitcoin and crypto is pretty good stuff. Okay, from Kitco. Yesterday, Kitco was saying, wow, everything is bad. The markets are crashing. What are they saying now? Bitcoin is bearish, but close to breaking above a bullish formation. Oh, hang on a second. Yesterday's news, they said the opposite. What's going on? NASDAQ, Intel closes sale for its upcoming Bitcoin mining chip. Oh, I see adoption on the horizon. This is really good. This is legitimizing Bitcoin. Intel, block supporting mining a positive for Bitcoin's price. Yeah, absolutely. Bitcoin spot volume nosedives. You can see how much conflicting news stories there are. Well, how many there are. And one thing we know very well, how Bitcoin is controlling the ebb and flow of crypto. We go through it every day. So we can see a bit of mixed news at the moment, but it's really interesting how Kitco yesterday was calling doom and gloom. Now it's calling bullishness. Wow, very interesting. Rule 45, no alt can escape Bitcoin's gravity. This is a really, really important rule. If you understand this rule, you're well on the way to doing really, really well in crypto. So let's have a look at what mischief Bitcoin is currently up to. Bitcoin's currently trading at 41,926. We can see these rejection tails. What is that telling us? From a crypto technical analysis perspective, it's saying that lower prices are getting rejected. There's buyers pushing the price up. They need to push it across this 41,933 mark because we've had a lot of support through there. But even better is to come up to 42,350. That's where we really need to get above. Then we'll get some resistance around this area, 43,854. When we get above 44,402, then we're starting to rock and roll. We're starting to get repair. Things will start to turn around. But a lot of people are very, very bearish on Bitcoin. Why is that? The bearishness is understandable. We've been on a down path for around 63, 64 days. Of course, that makes a lot of people very disturbed. Where will Bitcoin go? Will it just continue to slide? And when we look at the technical patterns, we look back on December the 5th, and we saw that this kind of price action does tend to play out a lot in crypto. We wouldn't expect Bitcoin to go much lower than 37,406, but as a community, we're looking forward to that because we make volatility our best friend. Volatility is an inherent part of the crypto market, and embracing volatility is the way to sleep really well at night and get rid of crypto stress. There's too much crypto stress out there already. That's why we always talk about Rule 774, master yourself to master the market. Our community focuses on maintaining a positive excellence life trend. Money is not the be-all and end-all of life. In fact, money is unlimited. You can never have enough. For example, if you go to a job and you earn a certain amount, that could be $50,000 per year. You could feel rich if your friends are earning less than that. But what happens when you come across a group who's earning $500,000 per year? Now suddenly you've just felt poor. And those groups earning $500,000 on average a year, they could feel very poor compared to the people earning $5 million per year. And the $5 million could feel poor in comparison to the people earning $50 million per year. It just goes on and on and on. It's just a meaningless comparison. These kind of comparisons create a lot of inner and outer turmoil. Living with inner peace and outer peace is really, really important for your health, as is living from a position of integrity, decency, kindness. Having meaning and fulfillment in your life is really important. A lot of people get into crypto saying, I want to get rich. But what does that really mean? And how rich will you actually be in comparison to others? The comparison trap is something you just don't want to get involved in. There's a lot more to it as well. When we look at KS zone analysis, these are the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. Zones 1 and Zones 2 are the certainty zones. This is where people only focus on a specific crypto. They don't care about the market. They don't want to look at anything. They just want to buy and sell. And they want to do it now, as quickly as possible. This is a recipe for losing money in the crypto market. Over time, people understand that zones 1 and zones 2 are just full of stress, and the addiction to certainty is a trap. There is no perfect timing, and trying to capture every single move in every single crypto is just a fantasy. Through kindness and forgiveness and understanding towards themselves, people can move out of zones 1 and 2 into zone 3. Zone 3 is the patience and rule zone. Patience is really required in crypto. We can actually scale into a crypto and witness increasing losses on paper. And that is okay because we know what we're doing. We're scaling in, buying at support levels down. Forgiveness is really important to get out of zones 1 and zones 2. This is never forgiveness for other people. It's forgiveness for yourself. To understand you can't time the perfect top or perfect bottom. You can't capture every move. And you will make wrong decisions. It's just the way of the world. But that's all about learning and holding yourself accountable. Also in zone 3, this is the zone where people make money. You can see zones 1 and zones 2 are high stress zones where people lose money. Zone 3 is where people make money. And zone 4 is where there is meaning attached to keeping money. Different skills play into different zones, and it's really important. In zone 4, we disassociate the greed and money combination or connection. There is actually no greed when it comes to making money. Money is a neutral thing. For example, I've always brought up the idea if you put a scalpel in the hands of a surgeon, it will heal. The same scalpel in the hands of a murderer would kill. It's the same scalpel. Money is exactly the same. Good people do good things with money. Bad people do bad things with money. They're just people. You can see Rule 781 is really important. Crypto technical analysis is a skill and it's a philosophy. It's the philosophy of money, but done from an integrity basis and a kindness basis. There's too much greed in the world already. In focus of money, it's just a soul-destroying thing. Crypto technical analysts understand money. They understand wealth. Specifically, they understand how to make money, how to keep that money, and how to enjoy it. There's plenty of people in the world that have a large fortune. We can say that they're rich, but they're not wealthy. They actually deprive themselves of so many things. If you've got wealth, you actually enjoy it. You can be rich and very stingy. Think about Scrooge, Scrooge McDuck from Disney Tales. That's that kind of thing. Being Scroogey and being that kind of person, you may be rich, but you're never wealthy. Crypto can create life-changing wealth, but money without meaning is another form of poverty. That is not what we stand for as crypto technical analysts. You don't want to be impoverished, especially if you become well off. We can see for the past approximately 2.5 months, there's been enormous fear in the market. Retail investors see red and they run. When smart money sees red, they run towards buying in layers down because they know that these cases of extreme fear are the ultimate best cases to get in. They've got a very different perspective on the market. They know what they're investing in, they know what they're trading in, and they know how to do it. There's a very large interplay between crypto, which is a highly risky asset class, stocks, which is risky but not as risky as crypto, and bonds, which are seen to be not risky unless you have Evergrande or Chinese property market bonds, in which case they're really risky. The basic mechanics or the basic building blocks between stocks and bonds. When bond prices go up, that means stocks are getting really risky and people are pushing money from stocks into bonds. When stocks go up, bond prices come down, yields go up, money flows into stocks and crypto. This is basically the way, but it's not always a rule, and that's the thing. People are always looking for certainty, but that certainty is zone 1 and zone 2 behavior. That's loss behavior. We must move into probabilities and keep our minds open. We can also see the crypto is really tiny market compared with the stock market and the bond market globally. And these stats, 95 trillion and 128 trillion, were from November of 2020. But it just gives you a positional sizing so you can understand the relative differences between the markets. Okay, let's have a look at the stocks and the bonds. It's really, really important for us to understand. Masterclass students, when you get to TM6, you'll get my live chart here. The masterclass is all about me transferring my knowledge, and it has a very, very specific reason as to why it came into existence. If you'd like to go across to www.cryptotechnicalanalysis.org, you'll actually, if you click on the testimonial section, I just put a video up from episode 365. It's a little snippet as to why I actually started the masterclass. It's all about knowledge transfer. I want you to be able to do what I do and just give you the skills that I've amassed over 30 plus years. If you'd like to get an idea about how other people have found the masterclass, you can just scroll down. There's a lot of different quotes from a lot of different people. They've found it to be quite useful. I'll just leave that up to you. And if you would like to have a look at the ambassador section, you can express your interest in becoming a CTKS Ambassador, which is the highest honor in crypto technical analysis. In the main markets, we see a lot of fear, and this fear is always cycling up and down. I used to trade the VIX. The VIX is a little bit of a crazy animal. Let's just drill in here. When I say it's crazy, it just spikes. You have to do CFDs on the VIX, which is a little bit of an issue. They cost a lot. But the concept is the VIX is always going up and down, up and down, up and down. It's really spiky by nature. One thing that we always must bear in mind, when the VIX starts to spike up exponentially, we must pay attention. And this is usually accompanied by a lot of other things. You can see the VIX back here when the US had its liquidity crisis and COVID first hit the world. The shutdowns just basically drove fear up a wall. It literally came up the wall and then down the stairs. What we actually need to always keep in mind is when fear gets too out of control in the markets, we may have a correction. And a lot of people inside zone 1 and zone 2, they really panic. But zone 3, we know that that is the ultimate time to actually enter the market. Far from being the worst time, it's actually the absolute best time. All professional traders and investors make in advance probabilistic choices in 3 dimensions. What will they do if price collapses? What will they do if price just increases exponentially? What will they do if price stagnates and goes horizontal? Typically, retail investors only have one of these positions playing out at any point in time, and that is what causes so much stress. If you have a strategy for each of these 3, you'll sleep really well at night. When it comes to market crashes, there's a bit of an architecture that traditionally applies. We generally get really a ramping up of price. Smart money knows that it actually calls in retail to buy what they're selling and push it up and then dump it. This is what smart money institutions do all the time inside the stock market. It's a little bit different inside crypto, different kind of behaviors, but we need to be aware of what they do. What you can see here, back when COVID was actually breaking out, we saw a lot of momentum inside the market and then it just collapsed. This is what a collapse looks like. I'll just zoom in there. When the stock market collapses, it doesn't mess around. It just collapses. It literally loses the floor under its feet. And this is the kind of behavior that we see until we get an ultimate capitulation. But the really cool thing is Bitcoin capitulates first. And then in time, we just see the markets repairing. This is exactly what happens. But the critical thing is, how do they repair? And what is this 10-5-10 thing I hear so much about? Let's look at it from this perspective. When the US market, this is the NASDAQ 100, When the Nasdaq came down, it came down 32%. We call that Tuesday in crypto. When it actually rallied up back to that same level, it came up around 47%, down 32, back 47. Just think about it this way. If the starting price was $10 and it dropped to $5, that is a 50% decrease, but it comes from $5 back to 10. What is the percentage increase? Please let me know in the comments section. The major thing here is to understand that yes, it can fall off a cliff, but actually when you buy on the way down, especially the long tail rejections, the redder the better, what you'll find is that you can actually make money all the way down here. This is from a trader's perspective. There's always opportunities in the market. It doesn't matter if it's a bull market, a bear market, consolidation, if it's a market crash, it's totally irrelevant. Traders can make money. Sometimes we may have to exercise more patience than other times. For example, when things are going up, you can buy a position and watch it go up. But when things are going down, that is when the skill comes out. Warren Buffett had a really good quote. He said, "Only when the tide goes out do you discover who's been swimming naked." Many people can do well in a bull market that really requires very little skill, if any skill, other than gambling. When the markets come down, you need skill. And that's what we share every day inside our community, and especially in the masterclass. It's really interesting. If you listen to the news, everybody's panicked. Oh, crash, crash, crash with the Nasdaq. It's just coming back to an area of structural support. We would expect that structural support to kick in around 14,907. It's not far away now. What can we see with oil? Oil has been basically going up the wall. Now, this is really interesting because when you get a crash, do you know what happens to oil? When we get crashes, oil actually falls off a cliff, and it does so in spectacular fashion, even to the point that it actually went negative. This is really important to understand. We're not seeing anything like that at the moment. We're seeing the exact opposite. Oil is making a rally. What about bond prices? Bond prices have been rejected and are coming down. But is that what happens in a crash? Well, let's have a look. We're all about crypto inside our community, and we can see this blue line. This blue line is Bitcoin's price. Notice that Bitcoin's price just fell off a cliff back here in the COVID and US liquidity crisis time around March. Now, what did oil do? What did bonds do? Bond prices just literally exploded up the wall. And this is really important because we would expect to see very similar action to this if we were getting a particular crash. But what is happening with bond prices? They've actually been rejected and they've been pushed down dramatically. We've got a level of technical support through here, so we would expect a technical bounce, but it's very, very under pressure. Bonds are a flight to safety, and they're made. You can see how much money is in the bond market, even more than the stock market. So for example, if bond prices were going up, it would be because people were saying, I'm getting out of here, I got to rock and roll, this is really, really bad. I'll just pop my money in something that returns next to nothing, but it's better than it collapsing. What we can see here is a negative divergence. Generally, when bond prices come down, Bitcoin and crypto goes up. It's not been like this. I think we're going to see a whipsaw, and I think it's just really much like what happened around the 21st of July. At that time, people were feeling so negative about crypto. There were comments, oh, Bitcoin is going to 10,000. Some people suggested that Bitcoin was worthless, that it would go to zero. You're always going to get people who don't understand what they're talking about, I guess, because crypto is the ownership layer of the next level of the internet. I was involved with running internet businesses back in 1993. I owned an internet service provider, those guys that had all the dial-up modems that you could dial into. And I saw people had no idea what the internet was back in 1993. Right now, you couldn't live a day without the internet. The internet has become so important. Crypto will be like that 10, 20 years from now. We're really, really early. Sometimes people think, why am I looking at so much data? I just want to buy, I want to sell. If you don't know which direction the market is moving, you can get really, really badly burnt. Zone 3 behavior is knowing what is actually going on out there. The more you know, the more probabilities you can stack. So what are we stacking right now? Let's have a look at it. The fear index is going up, but it's not going parabolic. It's just within normal. And we can see the NASDAQ 100 is coming back to a level of technical support. Yeah, it's definitely sold off a little bit, but seriously, so what? It's been doing so well. And what we see here with oil, oil is going up. In crashes, oil drops off a cliff, literally. And what do we see with bonds? Bonds have been rejected. There's no flight to a safe haven here at all. Is there a crash incoming? Not from the data, not from the probabilities. And that's why we must trade the chart in front of us. But what would happen if we didn't look at any of this information? We'd just have to rely on the news. Who makes the news? Well, the people who want you to buy or sell at specific prices. And we don't listen to them, do we? So let's have a look at what is happening to yields. We can see yields are coming up. And what's been happening with yields across time? Across time, Bitcoin has been really quite closely correlated with the movement in bond yields. And we can see this divergence again, just like we see divergences everywhere. That's why I'm leaning in heavily to crypto, because buying at lower levels down just gives us a fantastic buy price, and you make money when you buy. Of course you make money when you sell, but you don't want to buy at the top and then have to wait such a long time for things to get higher. You want to buy at levels of support below. Why levels? Because we're never ever certain as to how low things can go. So we look for long tail rejections. But when we look at bond yields, what do we see? They're coming up. What do we see when there is a crash? Do we see this kind of behavior? No, we don't. We see bond yields collapsing. And this is what it's all about. We're getting so many signals that the market is healthy and it wants to party. But unless we look through this in a deep manner, we wouldn't see that. We would just see the news headlines, crash, doom. Well, you know, they've got to sell their papers and their articles somehow. Turning to the Wall Street Journal headlines, have a look at that. NASDAQ falls into correction territory. It's just coming up to a level of technical support. What are they talking about? What it is really simple. All news agencies must reflect the current sentiment of the day. It's really important for them to do so, because people wanting certainty will just basically lap up anything. And when they do so to their own disadvantage. That's why we must face the probabilities. We've looked through the market and we can see the NASDAQ is coming down, but it's not falling into anything. For example, we can see this level of technical support running through here. It's getting really close to hitting it. And we're going to probably, in all probability, get a big bounce up unless retail sentiment takes a nosedive and people just lap up the particular news articles they hear and read and listen to and watch. Hopefully people don't do that, because guess what? The people who are buying what retail are selling, they're not wanting retail to do well. We can see gold prices have cleared a level of resistance. They've been quite strong here. They've cleared that level and are on the way up. The next level of resistance is around the 1866 mark. Notice that the DXY, the US dollar currency index, has maintained that support. Remember, we were talking about when it dropped down here, it would grab this support and all likelihood just bounce up. This is what we're seeing. We see these things play out every day. That's why it's good to actually bear in mind what is happening and only trade the chart in front of you. If you listen to the news, you basically jump out the window. The news is not your friend. It is not there to help you at all and has never ever been there to help you. Masterclass students, you get this when you reach TM6, and you can drill in exactly the same way I have drilled in here too. Bitcoin and inflation expectations have been very positively correlated together. We can see inflation expectations, both the 10-year and the 5-year, are on the way up. And we notice the divergence again between crypto and inflation. We would expect crypto to do a bounce up to factor in this. That's why some things we look at are more important than others, but they are all important. Masterclass students, when you reach TM4, you'll get a copy of my live chart here. A key aspect in the news is Evergrande and the Great Wall of Chinese debt in the property sector. China claims 8.1% growth. No, that's not bad, is it? No Evergrande fallout in Britain. And there's a couple of really interesting things. Developers sour on China's easing proposals. What do they say here? Chinese property stocks and bonds rallied for a second day after the central bank pledged to use more monetary policy tools to spur the economy. Surprise, surprise. We've been saying it for months. Masterclass students, when you reach TM5, you'll get a copy of this live chart as well. When we look at the Chinese property market, we're actually looking at 7 of the larger Chinese property developers from Evergrande, Fantasia, Cynic, Kaiser, Greenland Country Garden, and Vanke. We're looking at their share prices. We can see the share price, for example, of the white one, that's Vanke, is going up. Evergrande is kicking up as well. Let's just zoom in here. This is exactly what we've been talking about for many, many months. It's really important for us to know how the Chinese property market is turning around, and it is turning around. You can see all of these companies. This is a restoration in confidence. You can consider the share price of any company that trades in the market, the stock market, as being a reflection on its future prospects. If the future prospects are really, really low, it will dive off and tend towards zero. If it's repairing, the share price will go up. This is really important stuff. We don't care about what people say in the media. We only care about what the charts tell us. And a big shout out to Richard. Thank you so much, my friend, for your sharing of information. So why do we look at all this stuff? Isn't it got nothing to do at all with Bitcoin? Isn't Bitcoin decorrelated from the stock market? You know it's not. All markets are intercorrelated, and you know there's a play between high risk, medium risk, and pretty much low to no risk, which is the bond market. Unless, of course, it's Evergrande bonds, in which case it's very risky. The concept is, when we look at Bitcoin and we know Bitcoin's gravity will impact all alts, we don't see any systemic issues calling for a market crash. That's not what the media is telling everyone. The media is saying, get ready for a crash. Wow, I need to read that article. I need to subscribe to that particular magazine. Yeah, well, that's how they get subscriptions. And a lot of YouTubers are doing the same thing because they rely on advertising revenue. And if you look at Bitcoin's price action, it's very consolidatory by nature. It's not being able to get below around 41,500. It's just having a terrible time getting below. That means that there's a lot of buying support under here. So be really, really careful who you listen to. I would suggest only listening to the chart. And that's pretty neat. How do you listen to a chart? Eventually the fear comes out of markets and it's replaced by hopeful optimism, and then it can go towards euphoria when we see exponential increases in price. But if we don't look through all the market data, we don't know what is happening. And we do know that C19 is really out of control at the moment. From my perspective, I'm just looking at this as a unique opportunity to buy more effectively. If we get retail panic, That means that we'll get some downward price momentum because the institutions want to promote that, because they want to buy lower. They want to buy $10 for $5, and then $5 goes back to $10 and retail says, "Ah, I recovered my money." And the institutions just made a certain percent. What was that? Please let me know in the comments. This video is getting a little long, so I'm just going to leave it there and break what I've actually recorded into 2 videos for today. The key is to just keep on making your in advance probabilistic choices. If the markets go down, what will you do? If they go up, what will you do? If they go sideways, what will you do? Just keep thinking about this. This is really, really important stuff. I hope you found the content useful, and we'll be back with part 2 of this video just in a little while. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. If you would like to talk about what you feel the probability is of a market crash in crypto or across the stock market, please let me know in the comments section. It's really good to discuss these things through. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video, such as the link to the masterclass. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.